Hi, my name is Craig Vaughan from Professional Home Loans. This presentation is about how to get a home loan up to 90% LVR, that is with just a 10% deposit, and have your lender's mortgage insurance waived. What we're going to look at in this video is firstly, initially and quickly, what is lender's mortgage insurance. Secondly, how you can get your loan approved at 90% without paying that insurance, some case studies and examples, and then what the next steps are in your purchase. Firstly, what is lender's mortgage insurance? Lender's mortgage insurance, or LMI for short, is all about protecting the bank, the lender, against buyer default. Okay, so if we've got a bank, let's say ING Direct, for example, and they lent to Joe and John Smith, and Joe and John Smith defaulted on the loan and didn't pay the bank back, and the bank lost 30 grand or so after selling that property, the lender's mortgage insurer would pay the bank out that loss of 30 grand. So in this case, the lender's mortgage insurer would pay Suncorp or ING Bank, whoever the bank might be, 30 grand to cover the bank's loss on that transaction. So the key distinction here is LMI is about protecting the bank and not you as the buyer, so it should not be confused with personal life or income protection insurance, which protects you if you're unable to work and things like that. Lender's mortgage insurance generally required when you haven't got a 20% deposit. So if you've got maybe a 5 or 10 or 15% deposit, you will generally be required to pay lender's mortgage insurance. If you've got 20%, you won't pay mortgage insurance. How much does it cost? It's very much a percentage-based system based on risk. The higher the risk, the more it costs. Not indifferent to any other insurance. For example, if you're getting home and contents insurance in a place where flooding happens every now and then your insurance would be more expensive than a client who is buying in a higher up area with no flooding. Same thing here. The closer you get to 95%, the more expensive it is percentage-wise. The higher the loan amount threshold, 500 to $1 million, 300 to 500, the more expensive it is as well. So for example, if we look at 89 to 90%, you'll see that a loan amount up to 300 grand would be 1.49%. But for the same loan amount, if the LVR was 95, would be 2.56% of the loan amount. If the loan amount is higher, between 300 and 500, it's 1.97, and 500 to 1 mil, 2.75% of the loan amount. So they're all percentages. So if we know the loan amounts, let's do an example. On the next page, I've got an example. If the loan amount is 450 on a purchase price of 500, the LVR on that is 90%. The premium, we know from this table here, at 90% for a loan between 300 and 500 is 1.97%, and therefore the LMI payable on that transaction would be 450 by 1.97% to give us LMI payable of $88,865. So LMI is quite expensive. You can see from this table that at 90%, it's okay. It's sort of a uniform increase, a nice uniform increase from 80 to 90. Over 90, it becomes quite expensive. So from 90 to 91, it increases from 1.49 to 2.07, 1.97 to 2.69. Starting to get very, very expensive once you go over 90%. Here's just an example. I want to show you that lender's mortgage insurance also differs from bank to bank. Every bank will have a slightly different premium. And so it's important when we're looking at if it wasn't for waiving LMI, it's important we're looking at both rate but also fees. In this example, I've just highlighted 4 banks, just random: CBA, St. George, Homeside, and AMP, just to show that there is some massive differences. For example, at 400,000, CBA is about 6,746. St. George is about 1,000 higher. Homeside's a little bit more expensive than CBA, a couple $100 more, and AMP is a little bit cheaper. So there is some little bit of savings to be made, and when you're looking at what bank you're going to go with, we need to be looking at both rate but also incorporating any fees payable as well as the lender's mortgage insurance payable. How can you waive LMI? Now that we know what LMI is, it's about protecting the bank against the borrower default. What some banks have done is determine that there are certain type of occupational clients that do not default on their home loans. Okay, so LMI is all about protecting the bank if the client defaults on the mortgage. If the bank determines there are a certain group of clients with certain metrics that do not default, they've decided that they will look to waive LMI for those applicants. To get LMI waived, the metrics are very tight. The qualities they're looking for are very, very tight. They've spelt them out. We need this, 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 and this, and then we'll look to waive LMI. If you don't meet that, we're not going to do it. We know that this group of clients do not default, therefore we're prepared to consider that. Those 4 criteria to get LMI waived is you need to be in an eligible occupation. You need to have membership to confirm that you are actually in that occupation. You need to have sufficient income or meet a certain income level depending on your occupation, and you also need to have a clean credit history. So the first criteria is occupation. You need to either be a medical practitioner, which includes vets, dentists, optometrists, GPs, of course, a medical practitioner, or an industry professional, which includes lawyers, accountants, mining, geologists, engineers, and surveyors, and a few others. It's not an exhaustive list. Certainly, there are other occupations that could be considered here as well. But generally, a medical practitioner, or you're in a high demand occupation. You need to have membership to confirm that you are in that occupation. So, for example, a GP might be the member of AMA. And note that you don't need the membership now. You just need to be able to get membership. We can get pre-approval, for example, subject to getting that membership. Most people, if you're a GP or another type of doctor, you might not have AMA membership, or you might not have the membership that the bank's chasing. But as long as you know you can get that, we get you pre-approved. That's going to save you thousands in mortgage insurance, and you then go and pay a few $100s to get your membership updated. Here's just an example of the memberships for the industry professionals. So accounting, for example, CPA, CFA, legal, you need to have your practicing certificate to confirm your admission, and mining and engineering and resources and so on would need their appropriate memberships. You need to have sufficient income. Well, not everyone does actually. So medical practitioners do not have a minimum stated income level. If you're a GP, optometrist, and so on, you don't need a minimum level of income. As long as you can afford the repayments with your existing liabilities, then that's all that needs to happen there. Industry professionals, though, do require a minimum level of income. $150,000 is the minimum level. However, there are exceptions to that. So, for example, we had a couple approved last week. Both were professionals, but they were earning around $90,000 each. Bank accepted that. Professionals as a whole earning more than $150,000, they considered that as an exception and overall waived the LMI on that one. Another one, for example, was that client was very, very close to $150,000 and was looking at a pay rise later that year, so they also were approved with this policy. So $150,000 for industry professionals, lawyers, accountants, and so on. Medical practitioners, no minimum threshold, just as long as you can afford the repayments and so on. Finally, the fourth criteria, apart from having the 10% deposit and so on, is you have to have clean credit history, free from bankruptcies and defaults. That might sound common sense, but even a small little $200 telephone default would affect your ability to waive lender's mortgage insurance. If you do not meet that criteria or don't qualify for an exception and you would be paying LMI at 90%, we have a couple of options still for you. So, for example, we can do 85% with no LMI. General rule is 80%. We could still go to 85% if your application is otherwise strong. We also have an option there where if you've been in your occupation for 2 years and your current employer for 2 years, we can look at discounts of up to 30% on the lender's mortgage insurance premium. And there's also the guarantor home loan option as well. So if you've got mum and dad that's prepared to go guarantor, they can guarantee the 20% deposit and you wouldn't pay lender's mortgage insurance in that scenario either. Just looking at one example or a couple of examples, the point I'm trying to make on this slide is very much about we can use this policy, this waiver of lender's mortgage insurance, for many different purposes. We can refinance your existing home loans to 90%. You can then use the extra equity to buy another investment property, to pay out some debt, to sort of have a holiday, pay out some, buy a car, that sort of thing. So we can refinance your existing loans to 90% as well. This client here was an accountant in Sydney, and she refinanced her home, released $133,000 in equity with no LMI, and then used that to buy 2 properties with no LMI as well. Total savings across all 3 loans was about $48,757. So a massive savings. Just using the equity in her existing home, she bought 2 more and saved herself about $48,000 in lender's mortgage insurance. What are the next steps? Look, the next step really with the no LMI Premium, it requires sign-off by senior lenders. It takes a little bit longer than normal. So instead of being a day or two, you're probably looking at 3 or 4 days to get that sign-off. So you do want to get pre-approval first. Get the pre-approval first, then you know you're sorted. Then you go out there and make your offer, sign a contract, and then eventually obviously move into your home or rent it out when it settles. Your next steps really from here depend on where you're at. If you are just in the very early stages of researching, then consider downloading our free report there on our website. Lots of information in there about the criteria, the policy, and a little bit more detail. If you're actually looking to buy in the next 3 to 6 months, suggest you contact us now, either by calling 1300 397 287 or jumping on the website and putting an inquiry in. Pre-approvals will last 3 to 6 months, so if you get it now, get it pre-approved, you're then ready to go as soon as you find a place. And if you found a place, contact us straight away. If you call, great. If you put in an inquiry, just note in your comments that it's urgent. Thanks very much for listening. My name's Craig Vaughan. Feel free to contact me directly. Details on the website, phone number, email address is all there. Look forward to talking to you and helping you with your purchase or refinance or whatever it may be. Bye for now.